And now to our market monitor, who likes stocks with yields higher than the U.S. treasuries right now. He is Erik Ristuben, Chief Investment Strategist at Russell Investments. Last time he was on in February, he recommended the following stocks: Target, which is down a fraction; Southwest Airlines, which is down 10%, and Proofpoint is up 8%. Erik, welcome. Nice to have you back with us.
Good to be here.
Do you still like most of those stocks, or all of them for that matter?
Yeah, we still own all of them. We still really like Target. It's one of the stocks we think is going to benefit thematically from an improving economy. We're just not buying that China is going to send us into the economic abyss. We think the U.S. is going to continue to grow, and companies exposed to growth are going to do well.
So let's talk about your first pick, and that is Target. You like its dividend yield, almost 3%, and you like big blue chips generally. So tell us about Target.
Well, Target, the dividend yield, it's important to think about this. It's above the market. The average dividend yield's closer to 2 than 3. So it's above the market, but it's not so high as to get the interest of yield specifically oriented investors. You get into really the highest yield stocks, they're a little bit pricey. So we think the yield offers a good basis for return. Plus the consumer is employed and they're spending money. We think Target will benefit from that and their earnings will move forward.
You also like Wells Fargo. In the face of a stronger economy, they may lend more, but a lot of these banks are out with statements today saying that they may have to cut costs because they were expecting interest rates to be higher, and interest rates aren't going higher right now. So why do you still like Wells?
Well, we're an investment firm. Our time horizon's longer than a couple of months, and what we think the Fed has simply done is they've delayed maybe by 3 months a move that they're going to make inevitably, and that we think the pressure on interest rates is up. The economy is improving. Car loans are up. Consumer loans are up. Even at modestly lower rates, we still think banks are a good buy, and they got a whole lot cheaper today.
And you like Raytheon. I guess you're betting there that defense spending will continue to be pretty strong.
Yeah, government spending in general, but defense spending in particular. You're actually seeing for the first time in a long time, government spending is now a tailwind for the U.S. economy. We see no reason that is going to abate. And we think Raytheon is well positioned and nice valuation at about 15 times PE. I think you're going to see them actually benefit a great deal from an improving economy and government spending.
And very quickly, you said you think that the Fed's going to delay just by a couple months. So that would put you on the record for a rate hike in December?
In December, absolutely.
All right, Erik, thanks so much. Have a great weekend. Erik Ristuben with Russell Investments.